Hello and welcome back. If anyone can hear me, please reply by chat. If anyone can hear me, please reply by chat. I will appreciate it. Okay, thank you very much. Today, before we continue, I want to go through a couple of questions that I received in email, and I believe it will be beneficial for all of you to see what the questions and the answers are. Number one, I noticed last night when we went through the sales tax, the sales tax payment was empty. The reason was, since this is a sample company, once you pay the sales tax, it won't show up on the managed sales tax window again. When you click on manage sales tax and you see what your sales tax liability is, on the right side, it will tell you how much money was collected. If you have more than one tax agency, it will be divided based on the sales tax item. And then it will tell you what's your liability as of a certain date, depending what report, what time frame you're running on. Now, the next step is to click on Pay Sales Tax. The exact same amount should show up. Yesterday it didn't show up because it was already paid once. So basically what you need to do is decide if you want to pay both or just one. Now, for those who work in an area there's only one, of course, only one sales tax item will show up. You click on the items that you want to pay, and then you click OK. Now, if there is, for any reason, you need to adjust, there is also I don't know if it's still on, that if you pay before the due date, you're entitled to 5% discount, that you can keep 5%. Then you enter the adjustment date entry if you want. Sales tax vendor is usually the one who collects the money, and then adjustment account where you want, depending if it's an increase or a decrease. Usually if it's a decrease, let's say you're entitled to keep 5%, then you would click on reduce sales tax by the amount, which is a calculated number. So let's say you have to pay $1629.27. So what you could do is $1629.27 times 0.05, which is 5%. And once you hit enter, the system will tell you how much money you're entitled to reduce your sales tax liability. All you need to do is enter an account. Where do you want the sales tax liability to go back? And this is only for those who are entitled for the 5%. 5% vendor, I forgot what it's called. And then you click OK. So let's say I'm going to put it into other income. I click OK. The amount paid, this is telling you that the amount you actually paid is a little less than the actual amount you were supposed to pay. You click all sales tax items. Now it will generate one check. Since it's one vendor, it will generate one check in the amount of $15.47. Now what's happening is it's taking out from your sales tax liability both amounts, and then it's subtracting the credit. Click OK, and the check is done. Where is the check? Well, it's in your bank account. You can click Close, go into your check register. We paid it from this account. I click OK. And here is my check. Paid to the order of the sales tax agency. You can either double click on it, and this is basically the sales tax check. Now it's paid, and then the next month, if you click on Manage Sales Tax, it will be the same procedure. This is how to take care of sales tax. Question number 1 was how do you enter timesheet? You could use timesheet to keep track of employees' work, and you can keep track of your own time. Now, regardless if it's billable or not billable, if you want to keep track of a subcontractor or for an employee, you have 2 options how to enter time. On the home screen, on the bottom, there is an option to enter time. There is a weekly timesheet and a single activity timesheet. Let's see how a single activity, the third option, time and enter single activity. The date, which is today's date by default, the name of the person or employee, either a subcontractor, which is a vendor, or the employee. So let's say we're keeping track of an employee's time. Do you want to keep track of whom they work for, which is my customer? And select the customer. Now, what service? Basically, what type of service do they do? And this depends on the rate, on the hourly rate, whatever you want to set up. So let's say they do labor. You keep track of class, you enter it here, otherwise you leave it blank. Now, this is also a timesheet. You want to see how long certain projects take you. You can click on Start, and the time will start ticking, and it will keep track how long it takes. You want to pause the time. Of course, on this side is the seconds, the minutes, and the hours. And then once you're done, you click on Stop. Then, whatever minutes, the system does not keep track of seconds, only minutes and hours. Then you can save it. If you want to turn around to go ahead and bill your customer, then keep the check mark as billable. Otherwise, remove the check mark if it's only for records. So let's say I'm going to enter here that it took 1 hour. And it's billable. Save and new if you want to record another timesheet, or save and close, and basically done. This is how to keep track individual on a timesheet. You can also use the same timesheet for a weekly timesheet. And this is giving you a whole week. Now, before we start using timesheets, we have to make sure that the setup is set to allow timesheets. You can edit, preference, all the way in the bottom, the last option, time and expenses, company preference. Do you track time? Yes. If it's set to no, you won't have this option. First day of work week. Does your week start with Monday or Sunday? The difference is, what will be the first day of the timesheet? Will it be Monday to Sunday or Sunday to Saturday? Create invoices from a list of time and expenses. Do you want to check this off to make sure that it will remind you to charge the customer for whatever time? Track reimbursed expense as income. This is usually if you have expenses laid out for customers and you invoice them, then it will be considered as income. Now you can also set your default markup percentage. For example, if you laid out $100 and you charge your customer for it, do you want to add a certain percentage, or are you just charging whatever it costs you? You can always change it individually. This is just for the system to suggest what the default markup is. And then the markup account will be whatever you add for the income account to be. Then you click OK. Here you enter the name of the person. Each person has a separate weekly timesheet. So if you want to track multiple employees, you will have to fill out for one employee first and then save it, fill out for another one. So let's say I'm selecting the same employee. Since we already did the single timesheet, this gets transferred over to the weekly timesheet. If you click on the time, on the hours, then you could click to edit single activity, and it will bring you back to the one you just filled out. This is also the same part. You could add customer and job and service item. You can enter notes if you use class. And then it gives you a total per customer, per item, filling in all the dates, and then it's adding the total at the end. If you have more than one customer but different items, the same customer, different items, you will have to enter it each line. And the same applies if you have multiple customers. And this is all for the same person, the same employee or the same subcontractor. You also have the option, and this applies if your employee works for the same person, almost the same hours, you could copy it from last week or from last sheet. Then you click copy last sheet, and it's asking you basically, because we started already to fill out the sheet, do you want to overwrite the existing sheet? When you're done, you can save a new or save and close. So let's say we have now a billable item for this customer, for the job, for this service that this person did. And we have it checked as billable. As soon as I save it, I go into invoice. Now you have an option to create regular invoices. You have a separate option to create invoices for time and expenses. Basically telling you we approved the type of the invoice. This is a brand new version that you could bill multiple customers for the same time as long as you have the dates correctly. You don't have, in the old versions, you will have to, let's see how the other one works first. If you do the old versions, you will have to click Invoices, Create Invoice, select your customer. This is a message that they have outstanding estimates. We want to bypass that. And this is the message we get, that we have time and cost still outstanding, billable time and cost. Now, we have 4 options, and right now we're talking about time. I click to select, I want to charge this customer. I want to charge the time from this employee. Now, since this labor doesn't have a rate, the system won't know how much to charge. You click OK, and you will have to fill in the rate. This is because on the item list, from list, item list, this item does not have a selling price. If you enter the selling price in here, then the next time you have this time, it will update automatically the cost. Also, you can use rate level, billing rate level, price level, as long as there is a standard price. This is how to enter timesheet. The second question was, so now if you, let's say this is $20 and it's 1 hour, so there's an invoice for $20. If I do save and close, I go back to my sheet, to my use weekly timesheet, enter the same person. Now you see it's no longer a check mark. This is a sign that it's already billed. It's already invoiced. Now, back then, I had one of the clients ask me a question, how can I rebill? Let's say if you delete the invoice, this will not write back to the timesheet that it's no longer billed. You will have to come back to the timesheet if you want to rebill from the timesheet. You will have to click again to create a check mark. Now this, even though the invoice was deleted, it will still flag you because it assumes, the system assumes, it was already billed. Are you sure you want to make this billable again? If you click yes, then the system will flag it to be billed again. So let's say no, and we're basically done. How do I get a list of time, if it's billable or not billable, if it's billed or not billed yet? You click on Reports, Employee and Payroll, I'm sorry, this is under Jobs, Time, and Mileage. And you have 4 types of reports. You have Time by Job Summary, Time by Job Detail, Time by Name, which is the person, and then Time by Item. If you want to see the Time by Job Detail, this is by customer. But it only has the hours. It doesn't have the time. It doesn't have the amount that supposedly it cost you. So you have the customer, and this is time by job, which is the customer. Then it has the item, who the name, meaning who is the employee, what's the status, is it billed or unbilled, and then the amount of time, the amount of hours. If you want to see only what was not billed, if it's billed, then it's okay. Click on Modify Report, Filters, Billing Status. Now usually it's set to any, not billable. I want to see anything that's flagged, not to be billed. Billable, but the status is right now it's still unbilled, or it's already billed. So if you only want to see the billable, but it's not billed yet, select unbilled, click OK. Right now it's only going to show the unbilled. And you can see how many hours were not billed. And then you can change the report, of course, based on whatever time you want. There's also another report, but this will work only on employees. You could export the timesheet to Excel. You click on Employees and Payroll, More Payroll Reports in Excel, and select Employee Time and Cost. This will open Excel, and then you will select if you want to see all the time that's not billed. Another question was, how can I see a list of all my accounts? I get a statement from Chase, and they show me I have 5 accounts and a total of my cash balance. How can I see my cash balance by Chase? The proper way to do it is to set up your account as a sub-account. From banking, if you have more than one account at the same bank, set them all up as sub-accounts. Number 1, you will have one account, call it, let's say, Chase. The type of bank, they're all bank accounts. Click Continue, and call it Chase. You want to set up online banking? No, because this is not a real account. Now, let's say this Chase checking and the savings account is all by Chase. So, I would want to modify this account. Right-click, click on Edit Account. Click on Sub-Account, and then select your main account. Save and close. You also want the other account. Let's say this account is also belongs under Chase. Right-click, Modify, Edit Account, Sub-Account of the main account, which is Chase. So now you have a list each account has the balance, and then you have a grand total, how much you have by Chase. And then you add all your accounts accordingly. How do I handle bounce checks and the fees? I don't remember if we already covered it, but let's see, there are two ways how to handle bounce checks. One way is, let's first see how to handle the bounce check itself. It's two separate entities. First of all, there's one option, and I find it easier. You click on the right check. Let's say a check of $100 bounced from this account, this checking account, on this date, from this customer, my first customer. $100. I will remove to be printed. Type in the number, either bounce or whatever code you want to say. And then scroll down all the way to the account. By account, you will enter accounts receivable. It's more towards the top. Select accounts receivable, very important. Under customer and job, you will select the customer again. And then you click Save and Close. Now, what's going to happen is there's a check written out from your bank account. So now your bank account is with $100 left. When you go into your customer center, you will see your customer owes you $100. Click on the open balance, you will see what's involved. And here's our check of the $100. In other words, you're writing out a check payable to the customer, and you're using the account of accounts receivable. This is one way how to do it. Another way how to do it is you go into your item list, you add a new item. The type should be other charge. Item name, call it whatever you want. Let's say bounce check. The description should also be bounce check. Now, this is the tricky part. What do you use for account? One way is that you can use directly the bank account. Problem is going to be, if you're using the bank account, then this is strictly directly associated with this checking account, with this bank account. If another check bounced from a different bank account, you can't use this item, because then it will withdraw money from a different account. What you could use is the wash account, but then it gets a little complicated. So let's say, for example, you're only making deposits to this account, so you don't have this problem. All your checks, if anything, will bounce from this bank account. So then you could use the account. But every time you use this item, the money will be withdrawn from this account. Click OK. Now you can issue an invoice, create invoice, to this customer. It has estimates. That's okay. It has unbilled cost. That's okay. Just leave it. The item should be the bounce check item. How much money? $100. Let's make a difference. Let's make it $150 to see the difference between the check and the invoice. Save and close. Now, what's happening? You go back to your customer and you see open balance. They have an invoice for $150. Now, looking at this invoice and this report, you don't know the difference between this invoice and this invoice. Unless you go back to the invoice and you type in a memo on the bottom. This invoice is because of a bounce check. Save and close. Do you want to save the changes? Yes. This is basically the spelling check. Just ignore it by clicking on close. Now you have the memo. You know that this is a bounce check. And this will also show on the statement if you send them a statement. The same $150 was taken out of your bank. If I go into the chart of accounts, to this bank account, this is the $100, and this is the $150 from the invoice. This is the two ways of handling a bounce check. Now you also have to remember to enter the bounce check fee. Same two ways. All depending if you're charging additional charge from your customer, different than what the bank charges you. Let's say the bank charges you $15 for a return deposit fee, and you go ahead and charge your customer $25. Then you should create an invoice for your customer. Create a check from your bank account using the right checks. No number, because it comes out of your bank automatically. Pay to the order of James, the bank. Account, bank service charge, bank charges. Amount, $15. Here on memo, you put a note that this is for return deposit for this customer. You click Save and Close. Now you have $15 coming out of your bank. Then you go into your item list. You create a new item. Call it bank fee or whatever you want to call it. Return fee. And then you follow the procedure. But the item, NSF fee, should also be another charge. Let's call it NSF fee for insufficient funds. The description you can copy it basically. Now, do you have a set price for the NSF fee? Let's make it $25. Every time someone bounces a check on us, it's going to be $25. Well, obviously, it's non-tax. And the account should be the bank charges. Click OK. Now you go into an invoice. Create invoice. This customer. Skip the estimate. And skip the billable time cost. The item should be NSF. Here it's warning you that you're about to invoice to an expense, which is okay. You click OK, you're aware of it. Now what's going to end up happening, you have an expense of $15 for bank fee. You have an income of $25 also for bank fee. Now your expense is negative with $10, which is okay. Click Save and Close. Now you're all reconciled. You will see the bank charge of $15 on your reconciliation on the statement, and you will also see the bounce check, which is $100 or the $150, whichever is correct. This is how to handle bounce checks and fees. Question number 6. How do you add multiple bank fees when reconciling? Yesterday, we went through how to reconcile. One of the questions was, should I enter the service charges? I mentioned that the service charges should be reserved for the monthly charges. But the question was if we can enter the other charges, the wire fee, all the bank charges, basically, that the bank charge. You basically go through your statements, and you see anytime there is a bank fee, add them on here. Let's say we have 3 times $35 for insufficient funds. You can do 35 plus, and then another $15 for a bank fee, for another bank fee, another $10 for a wire transfer. You can add them all up using the plus, and then once you're done, you hit enter, and this is going to be your service charge. And of course, you can only enter one type of account on here. If you want to keep track, each service charge category separately, then you can't use it on the screen. You will have to enter checks. Question number 7, how do I get the deposit report? This is a little tricky, since there are several ways how to deposit money, and from different types of deposits. Mainly from customers, which is sales most of the time, or loans, and any other type of deposits. You click on Reports, Banking, Deposit Detail. This will give you a list of all the deposits in this time frame. And it will also itemize where it's coming from. Now, if you have a payment and you set directly that the payment should be deposited into the bank account, bypassing the undeposited funds, then it will look like this. If you do have the payment go into the undeposited funds, and then it's grouped together as a deposit into your bank account, then it will look like the top one. This is the total, and this is the breakdown. And then it gives you the total again. So some of them you'll see a total, some of them you won't see a total. If you see payments, that means it's money from a customer. Now, if you want to see what was sold under this $1,200, it's either you can double-click and then go through the history until you find the invoice, or you simply run a profit and loss on a cash basis. So anytime it comes from a customer, unless it's not applied, it won't show up on the screen. Hope this answers the question. Question number 8, reconcile merchant credit cards. Reconcile merchant credit cards. If you really have to reconcile the merchant credit cards, I would suggest you use Intuit as your merchant service. Yes, they're a little more expensive in terms of the percentage, the discount, but it will save you a lot of time and it will be much easier. There are a few ways how you could work around with it. The best way is every time you accept a credit card, let's say you swipe it through a terminal, and then you enter it in the system as a received payment. Always make sure you use the proper payment method. This way, you can run a report of all your payment methods to see what was collected using American Express, what was collected using Visa, MasterCard, and Discover Card. I'll click on List, Customer Vendor Profile List, Payment Method List. Here's a list of all your payment methods. I can click on American Express, right-click, Quick Report. Set it to whichever date, time frame you want it. And then you can see exactly how much money was collected during this time frame, during this period, using American Express. And this total should match with your merchant statement total. Why is every transaction 3 times? Well, 2 for payment and 1 for deposits. You can eliminate, if you want, you can customize it. You only want to show the deposits. This is one way how to do it, but it's not the cleanest way. When you have a payment, you already deposit the money, especially if it clears. You can't change a payment. You have to delete the deposit first. Let's say, for example, I click on the receive payment, and I want to change something on this receive payment. I want to change the customer. I want to change the amount, something that's really effective. First of all, find out if this payment was already deposited. How can I find out? Click on history. You will see 2 histories. Number 1, how it's applied, to which invoice it's applied. And number 2, if it was deposited or not. If it was deposited, then it would say as another line. Unless deposit to is not set to undeposited funds. It's set to directly be deposited into the bank account. Now, if you try to change, let's say this was originally, it was a mistake. You find out that this was, instead of $49.20, this was $50. Okay, you're trying to save it. The message comes up, you need to delete this payment from the deposit before you can edit the name or amount. Anything else you could change, doesn't matter. The payment method, the date, the check number, you can change. Not the name or the amount. This card changes and continue. If you click yes, it will assume like you never did anything. You click no, you come back to the same screen. So what's the solution? How can I change it? Well, you will have to get rid of the deposit first. You click on history, you bring up the deposit. Now this is very dangerous. If you get rid of the whole deposit, and this deposit was already cleared, let's say from last month or 2 months ago, it might create a problem. The real solution is, first of all, you bring up the deposit. Don't delete it. Add the same amount with a different account. Select any type of account. Let's say, I would say, select an account, call it sales, for the time being. Let's say income account. Anything that you know, because this will be reversed in a few minutes. For the time being, I'm going only the from account is important, so everything else leaves. I'm entering the same amount, $49.20. And now click on the top line, which is the previous, and delete the line. How do you delete a line? Either Control Delete or click Edit, Delete Line. In this version, the best way would be to click Save. You sure you want to save the changes? Yes. This way you're not messing up your bank reconciliation. All you did was you removed the payment from this screen. What's going to end up happening, it goes back to undeposited funds. Now you can make any changes you want. You're still staying on your deposit. Go back to your payment. So you receive payment. It will be in the background as one of your open windows. If you click Now History, you only see one history. Why? Because you eliminated from your deposit. Make any changes you want. Let's say you want to change this customer. It should be from this customer or from a different customer. You save it. Save and close. It's warning you, well, are you sure you want to change it? Yes? Now it's changed and everything is fine. What did we change? We only changed the customer. Now you're ready to put it back onto the deposit slip. Click on Payments. Here is the payment. Click OK. Now eliminate the top line, either by Control Delete or click Edit, Delete Line. You're ready? Everything is set. Click Save and Close. Do you want to save the changes? Yes. Now it will not show up as a problem on your reconciliation. If you delete the original deposit, if it was already reconciled, you might have a huge problem the next month. Any questions so far? Now, speaking of a reconciliation issue, reconciliation problem. If you reconcile the bank, let's say for the month of May, everything matches, everything is fine. And then during the month of June, you made some changes. You didn't realize, didn't notice that one of the changes was affecting a transaction that was reconciled in May. Either delete it or add it, whichever way. Now you go into reconcile, and you see your beginning balance doesn't match. And this is because anything was changed from a prior reconciliation. How do you see what was changed and how do I fix it? There is a report called Locate Discrepancies. Click on this button and click on the first option called Discrepancy Report. If there is any problem with the reconciliation, it will show up on here. So let's say, for example, if I'm on my checking account and I scroll up until I find anything that was reconciled, let's say this check was reconciled, I remove the check mark. Gives me a big warning, do not do it, but I do it either way. I remove the check mark, now I record it. It warns me again. It will have a big impact on your reconciliation balance. That's okay. I click yes. Now you go back to your reconciliation and the balance won't match. Then you click, let me close this window. So I go back to my reconciliation, the balance is different. I click on locate discrepancies, discrepancy report, and here is my problem. You see right away what was done, and you know basically how to fix it. This problem is that it was unclear. The solution is to clear it. So what you do is you do the same. You will have to notice the reason, the problem. So basically what you do, you go back to the register and you add the check mark. You can print this report whichever way you want. This is how to solve a reconciliation discrepancy problem. There is also one option if you see that the last reconciliation was not done correctly. Let's say you come into a place and you see something was wrong from last reconciliation. You can see right away if there's a problem. If on the chart of accounts, one of the accounts on the bottom, one of the expenses, anywhere here, we'll have an account called reconciliation discrepancy. If this account exists, double-click on this account to run a quick report and see how much money you're talking. If it's a lot of money, you know that there's a huge problem. Then you can easily undo last reconciliation. You click on undo last reconciliation, it will roll it back to a month before. Only do it if you know that there is an issue. Next question was, we have a customer that is also our vendor. And the same applies the other way around. We have a vendor that's also a customer. My vendor has a balance of $200. That means we bought merchandise. So there is a bill entered for $200. My customer, the same person, owes the company money of $300. So my customer tells me, that person, that vendor / customer, tells me, I'll pay you $100 and we're even. How do you clear off the bill and the payment? Same thing applies if the amount is exactly the same. You have a bill for one person for $200 and you have an invoice for the same person for $200. Number one, it's impossible to have the same name on a customer center and on a vendor center. Let's see, I have one customer called ABC Company. I'm going to open the same name under my vendors. I click on new vendor, and I say it's called ABC Company. I click OK. I just want this as experiment, so I leave everything else the same. I click OK. This is the message you will get. This name already is in use on the customer job. You cannot have the exact same name. What you will have to do is slightly different. Add a space. Whoops, space didn't work. You will have to put something else in it. And then, of course, you can change if you want it to be the company name should be the same, and anytime you print a check, it should be without the symbols or whatever. Now, you have a bill for this customer, for this vendor. Enter bills for whatever expense. Let's say for insurance, $200. Save and close. Now you have a balance for this vendor, $200. Go into my customer center. I have the same company. Well, this company is already has a different balance, but regardless. Let's say I have a new customer, same person, with a balance of $200. How do we offset? That's called barter. You want to open an account, call it exchange, barter, call it whatever you want. An account meaning a bank account. I click on the chart of accounts on the list, and I open a brand new account. I would call it, the type is a bank account, and I would call it barter account. Or if you want, you could use exchange account. Save and close. It's not a real account, so it won't be set up as online service. Now we have a barter account. Receive payment from your customer. Let's say you have an invoice. Skip the estimate. Let's skip the billable cost. You have an invoice of $200. Save and close. Now I'm going to receive payments for this customer. $200. I would suggest to open a separate payment method, call it barter. The sample company has it already. Now, if you have the option of deposit it straight into the barter account. Otherwise, if you don't have this option, then the money will be deposited into the undeposited funds. The next step is going to be, once you save this, you go back to your home screen or any other place. Record deposit. Take this $200 as a barter. Click OK. And don't forget to change the account, the deposit to account, to barter. The date, let's leave it today's date, and then save and close. Now on your chart of accounts, you have an account, a barter account. It has a balance of $200. Go into your pay bill screen. You have your vendor here. Select you want to pay the bill of $200. How do you want to pay it? By using the barter account. This is flagging you that you could change the default account, but you don't want to change this only for this time. You can click on Do Not Display and click OK. Now, at the end, once you save this, pay bills, your barter account is going to be 0. And this is exactly how it's supposed to be. Pay selected bills. Do you want to enter a check number? Just leave it blank, click OK, and then you're done. Click done. Now you go back to your barter account, and you see you had a deposit of $200, which is a payment coming from your customer, and at the same time you have a check going to your vendor. This is how you should handle exchange accounts. There's another way how to do it using journal entries, but it's more complicated. You need 2 journal entries as well. Might as well use this. I find this more helpful and easier. Speaking of barter accounts, sometimes you might have this issue with intercompany exchange. A lot of companies have 2 companies. And of course, you will have 2 separate QuickBooks files for each company. You might have an issue if one company, especially if there's split expenses, one company lays out money or pays the bills on behalf of the other company. How do you track and how do you keep track of the money due to one or the other company? Let's see 2 scenarios. I received a bill. Number 1, what you should do is open an account on a chart of accounts. Call it due to from the other company. Let's say this is a construction company, and I also have another company called ABC Installation Company. So I will open an account on my chart of accounts. Now here's the tricky part. It must be one or the other. Either a current asset account or a current liability account. Now, I have clients asking me, what should I make it? Well, it all depends. What is more happening? Is this company laying out more money for the other company or the other way around? In other words, will this company owe for the other company, or will the other company owe for this company more? You could see you could see who is the parent company and who is a subsidiary company, like a sister company. You will decide who will pay more bills than the other company. Depending on the situation, then you can decide how you want this due to from intercompany exchange account to be categorized under. Should it be an asset? That means the other company will owe the money for this company, or should it be a liability, which means this company will owe for the other company? Any questions so far? I hope it's clear enough. Once you open this account, so let's say assuming this is going to be the main account, the main company, and the other company will always owe money for this company. And eventually they might, let's say at the end of the year, they might even out. I'm opening a new account, and I'm going to select a type as other current assets under the other account types. Click continue. And here I would call it due to from / from other company. Wherever you will type in the other company's name. Save and close. Now, sometimes you will have bills which should be shared. So you will enter it. Let's say you receive a bill, and you receive a bill from your water company. Today's date, we received the bill for $100. Now, this is a split expense. Half of the $100 should be water expense, but only half. So I'm going to take the $100 and I'm going to divide it. I hit the slash on the keyboard by 2. I click on the next line, and it knows that it's missing on $50. Just give me the category, and here I'm going to select the due to from account. And this is an asset account called due to from other company. Save and close. Now on your profit and loss, it will only show $50 expense for this company. The other $50 is on your chart of accounts as a balance from the other company. What you need to do is log into the other company and enter. When you double click on the account, first of all, in the other company, you will have to set up if it's an asset account in here, in this company. In the other company on the chart of accounts, it needs to be added due to from other company, whatever construction company. But the type should be a liability. Should be if one company is an asset, the other company should be a liability. You will double click on the liability account once it's set up. You would enter the information in the account itself. You would enter the date. The payee will be the same company. It will be an increase, the same as this side, of $50 because of the account of water expense. This is how you should do it on the other company. Now, the other company will show an account, the same account, due to from other company. This here will show other current liability, also a balance of $50. The bookkeeper's responsibility is to make sure that these two balances match exactly. Otherwise, if it doesn't match, run a report from both accounts and see where the difference is. How can you run a report from each account? You will have to, of course, you will have to do 2 separate accounts, both accounts separately. You right-click on the account, and you run Quick Report. This will give you a report of all the changes, the charges from this account. The same you will do on the other company. Now, in the later versions, you have the option to keep open two companies at the same time. You click on a file, you click on Open Second Company, but of course, it's limited. At least to be able to see, you could definitely do. This is how to take care of intercompany exchange accounts. The same thing happens if it's the other way around. You receive a bill to the other company, but half of it, or at least a portion of it, should be billed to this company. Then you will enter the bill in the other company, half for the expense, the other half for the liability account, the exchange account, and then you enter it on here with the other half. Any questions? Next question was, how do we write off bad debt? You go through your accounts receivable aging summary, and you see bad news. You see anything above 90 days. Let's say someone owes more than 90 days. You decide, okay, this is never going to be collectible. It's never going to be collected, so you decide you want to write it off. There are two ways how to do it. Accountants do it one way. Most bookkeepers do it a different way. Most bookkeepers will use a refunds and credit. But before you start with refunds and credit, you have to make sure that you have an item set up to handle bad debt. You go into your item list. You create a new item. The item type is, again, other charge. Other charge is used for anything that's not a service, not an inventory item, not a non-inventory item. Item name / number, call it bad debt. Description should be the same. Account. You need to make sure that you have an account, an expense account on your chart of accounts called bad debt. If you have an account on the chart of accounts, we have this account already, so you can just move on. Otherwise, you create an account called bad debt. The type is an expense. Then you select the account should be associated with the bad debt expense account. Then you click OK to save it. I believe this bad debt item is already set up. And yes, it is. You can't change it, you can't save it because this name already in use. Please use another name. You can't have two items with the exact same name. But this is the way how to set it up. Once the item is set up, and you only have to do it once, click refunds and credits. Select the customer that you want to write off. Let's say, for example, this person will never pay me. $14,000, it's gone. Go into your, click on refunds and credits. Customer is this customer here. The date, usually you would want to make sure it's the end of the year when you do all your adjustments. Item, bad debt. The rate, again, because this is associated with an expense, which is okay. The rate, how much money does this customer owe? $14,510. This is the amount. Of course, only if you want to write off the entire balance. Save and close. Now, you want to apply to an invoice because there is open invoice. There's a reason why you're writing off an amount. You select apply to an invoice, click OK. And this is because we used the customer instead of the job. The invoice is written out to the job. The credit is written out to the customer. I will need to go back to the credit memo, change the credit memo customer to the job. Save and close. You want to save the changes? Yes. Apply to an invoice. Okay. Now we have an open invoice. You click done. It's being applied automatically. Now this customer is wiped off. This is how you should do write-offs to bad debt. Another way you could do it is using received payment. You select the customer. Let's take another customer. Let's say, for example, this customer, $49.20, they will never pay. That example, let's take this customer. I click on New Transaction, Receive Payment. This will bring me this customer automatically. I'm not entering anything on here because they don't pay me. I highlight the invoice and I click on Discounts and Credits. I enter the amount of the discount in full of the invoice, the amount of the invoice. Discount account, bad debt. Click done. Now save and close. This customer don't have a balance anymore. This is two ways how to write off balances, whichever is easier and you find more convenient. Either using the refunds and credit screen or using the receive payment and using a discount. When you run your profit and loss standard report, both will show up on the bad debt account. The total is 15,515. Double click on it. The one that was issued by using a credit memo and the one issued by using a discount, which is a payment, are both on the account. Any questions so far? One of the questions was, how do you change the default suggested chart of accounts? Well, this is a tricky one. Let's say part of the interview to open a new account, to create a new company, a new QuickBooks file for a company. If you go through the easy step interview, it will ask you what type of industry, what type of company are you planning to open, are you basically creating. Based on the answer, based on the industry, what you select, it will suggest you a list of chart of accounts for your company, specifically designed for your company. Now, sometimes you want to say, this is going to be, you don't know exactly, so you say none/other, and then all of a sudden you decide, oh, I want to have the chart of accounts that is specifically designed, let's say, for a non-profit organization. Well, you only have this chance when you create a company. So let's say you created a company, start entering transactions already. What are you going to do? Are you going to get rid of this company and start from scratch? That's not a solution. What you could do is open a brand new company with the correct suggestions, with the correct type of company. Then you will have the option to choose your chart of accounts. Once this company is all set with your designated list of chart of accounts, then you can go in the new company. You're not going to use it for transactions. You go in the new company under File, Utilities, Export, List to IIS, and you choose you want to export your chart of accounts. Click OK. It will ask you to give it a name and save it in one of the folders. Save it either on your desktop or in My Documents, so you should know where to look for it. The next step is going to be you log in back into your existing company, the one you set up originally. You click on File, Utilities, Import, IIF files, and then you choose the same file that you saved previously, exported from the other company. Now you will have in this company, even though it's not specifically designed for this company, you will have your list that you want to have. I believe this is the easiest way how to switch around with a list of a chart of accounts, the one that you find suitable for your company. I've received one request to go through how to open a brand new company. I just don't know if more than one person wants that. Please let me know if you want me to go through how to create a new company from scratch. Okay, now I got a problem. It's a 50-50 vote. We will do it fast, so it won't take long. Usually, QuickBooks tells you it might take up to 30 minutes. I promise you it won't. You click on File, New Company. You get the screen called Easy Step Interview. You have two options. Option number one is to start the interview, and it tells you it takes 30 minutes. Option number two, it tells you to skip the interview and just enter the basics. Let's click on Start Interview. The top part, you will enter the company name. Let's call it Construction Company. You hit the Tab button, it will automatically copy the company name to the legal name. If it's a DBA, different type of name, you can enter the legal name, whatever the company is. Tax ID number is required if you're planning to use payroll or issue 1099s from QuickBooks. Then you need to enter a tax ID number. Otherwise, you can leave it blank. Street address, city, state, and zip, phone, fax, email, and website. You enter on here. Also, it's optional. You can always add it later. We'll see later how we do that. You click Next. This is where you decide, you select, and this is what we were talking before. You decide exactly what type of company you're planning. All these companies are divided into two main industry types, products and services. It's just a matter of what type. It all matters what type of chart of accounts, what suggested chart of accounts you will get. The last two types is if you don't see anything suitable directly for your company, set a general product-based company or a general service-based company. So let's say, for example, I don't want a product-based company. I'm going to do a service-based company. It should be property management. Let's say. Oh, we set up that it should be a construction company. So I need to set my construction company. Click Next. What type of entity is it? What type of organization? Is it sole proprietor? That means it's not a corporation. It's being filed on a 1040, and it's usually a DBA. Or is it a partnership, an LLC, a corporation, anything else? Let's say this is a regular corporation, or an S corporation, not-for-profit, or you don't know, and then you select other/none. Click next. When is your fiscal year start? Does it start in January? Most companies start in January, and the fiscal year ends in December. So you select a month. But if this, in your case, is different, you can select which month it is. We're not going to go through exactly what the laws are, and this is up to the accountant. Set up your administrative password. It's optional. You can leave it blank, but it's recommended. But keep in mind, if there is a problem, you can't retrieve your administrator password, you have a huge issue. Make sure you remember your password. Any other user, the administrator could override and can change. The administrator password is a problem. Click next. Now you're going to save your company file. It's going to be saved in a company, and then the previous screen you have this option to select how you want to call it and where do you want to save it. Usually QuickBooks saves it in a folder. There's a folder in the public documents called Intuit. In Intuit there's a folder called QuickBooks. In QuickBooks there's a folder called Company Files. This is where all company files are being saved by default. Takes a couple of seconds until it's being saved. Then you start with customizing your company. Click next. What do you sell? Services, products, or both? Let's select both. Do you charge sales tax? Yes. Do you create estimates? Yes. Do you keep track of orders? In other words, do you use sales orders? Yes. We went through the first step is an estimate, and then you convert it from an estimate into a sales order, which is rather recommended. You use statements. Statements is only for companies that will order, you will ship on account. On account, you will use invoices, and they will have balances. At the end of the month, you will send statements. So it's recommended for your company to have the statement feature. Click next. Do you use progress invoices? Meaning, do you send all your orders at once, or you send them partially and you invoice it while it's ready to go? Most companies, especially product companies, will have sometimes, once in a while, will have to use progress invoices. This way, if you set it to yes, you will have the feature, you will have the option. Managing bills you owe. Most of the time, it's recommended to enter the bills. Some companies will run on a cash basis, meaning they will not enter invoices, they will only do deposits, and they will not enter bills, they will only write checks. This is not recommended even though you want to run your company on a cash basis. You could still run your company on a cash basis even though you enter your bills and you use invoices instead of deposits when you collect money, when you receive money from your customers. Always use bills when they arrive, enter the bills, even though if it's paid in the same day. It's neater, it's nicer, and it has a lot of advantages. Doesn't take long, it doesn't take much to enter the bills. You can run your profits and loss on a cash basis and on an accrual basis. Accrual basis meaning to see all your bills, your expenses based on bills, or to see your income based on invoices. You can do the same by using the cash basis instead of the accrual basis, to see all your income only when they were paid, and to see all your expenses only when the checks to pay the bills were issued. So leave it as yes and click next. Tracking inventory, are you tracking inventory in QuickBooks? It's recommended to say yes, especially if you have products that you will buy for stock to be able to sell later. Click next. You keep track of time. Well, most of the time in a construction company, any time that was spent by employees is part of your cost, either by a subcontractor or for employees. You want to make sure, the way we saw before on keeping track using the timesheet, you want to be able to use the timesheet, and this is the settings. Also note, every setup that we went through now, we can still change under Edit Preference and switch it either to activate it or to deactivate it. Do you have employees? I would say yes. Do you have W-2 employees, which is regular employees, or 1099 subcontractors? Click next. Now you're ready to select what chart of accounts you want. You suggest a chart of accounts. Before you continue with the chart of accounts, they need to know, when is your company starting? Is it starting today, or is it starting in the beginning of the year? It all depends if it's a brand new company opened yesterday, or is it an existing company you just start using QuickBooks to keep track of your financing and everything else. If the case is that this company already exists for a long time, it also depends if you want to enter historical information or you want to start going forward. If the answer is going forward, then use today's date, or at least the beginning of the month. Some companies will use the beginning of the quarter for payroll and tax purposes. Some companies will say, whatever happened in 2010 doesn't matter, I want to start from the beginning of the year. So basically you set that your fiscal year should start at the beginning of the year. Then here is your option, your suggested list of the chart of accounts. Anything that has a check mark is recommended. Anything that doesn't have a check mark, you can still add. Even though you did not add the check mark to it, it won't show on your default chart of accounts. But then you will have the ability to add it by clicking on suggested accounts on a chart of accounts. We'll see later what it is. If you want, you can check each and every one, or if you decide, nah, I want to restore recommendation, anything that you just checked will be removed. And then you click next. And then basically, congratulations, you're done. How long did it take? 10 minutes. Go to setup, and now this one will not go through. How to set up a brand new chart of accounts, how to set up a chart of accounts, and how to set up the items, which is the next step, set up your vendors, and set up your customers. This will leave assuming you all know how to do that. In case you don't, let me know and we'll quickly run through just to refresh it. This is the screen you will get. Basically, this is part of setup. The first thing you want to set up all your contacts, which includes your customers and vendors. Then you also want to add your items, which is your products and services, and then add your account, including the most important account, which is the bank account. Or you say, start working, and I will add it later. Still have another chance, which is this window. You can go to setup and set it up from there, or you exit out, I'm ready to work. This is basically a brand new company, nothing, no information, no list, no nothing in this company. The first thing you will do is click on a chart of accounts and add your bank account. If you want, like you saw before, if you want to add a brand new account, you click and you want to add an expense account. This is select from examples. This is all the accounts that were not checked during the Easy Step interview. You still have the option to bring it, to activate all these accounts. And you click basically which one you want. You click OK. Let's say I want to add the advertising and promotion. You click OK, and it's going to be added once you click Save and Close or Save and No. This is basically how to create a new company. Very simple. Now we're going to cover a little bit. We're going to start with budget and forecasting. Don't know if any of you would appreciate it and if you want it, but I will just cover it briefly. Let's see how it works and what's involved. Under the company menu, you click on planning and budgeting. You have two options. Option number one is to set up a budget or set up a forecast. Now, in a blank company, meaning a company with no information, with no transactions, it's quite difficult to set up a budget. Because then you only have one option, to set up a budget from scratch. There's also an option to set up a budget based on previous year information. So the more information you have, the easier it will be to run a budget. Click on Set a Budget. Now, for which year do you want the budget? Usually it's for the coming year. The year one is based on profit and loss, which is the activities, or just based on the ending balances, which is using the balance sheet. Most companies will use the profit and loss. Click Next. Do you want it by customer and job? And for those who use class, it will be a different option called class. Then you can run each budget for profit and loss per class. But let's say you don't want any additional criteria. You click Next, create budget from scratch, or create budget from previous year actual data. In a brand new company, there's no actual data, so you only have the option to create budget from scratch. You click Finish. Here is the option to enter basically everything that you're planning to use, either income and expenses for the next year. Once you're done, you click Save. Then you could do the same. This is basically how to do a budget. But if you have existing data already, you could basically get the idea from last year or year before, and then move forward and do any adjustments based on the criteria, whatever you feel that's going to be more or less. So let's say, for example, I'm expecting to have, let's say, $10,000 a month from the construction income. You can also use copy across. Every month is going to be the same, assuming. So this way you don't have to enter each month separately. The copy across button is all the way on the bottom left side. Let's say you enter something different here. You can click and say, for example, if each month it starts with $10,000, so you're expecting every month to go up or down. by a certain percentage. You could say start the first month, and then each month it should go up with a certain percent. Let's say it should go up with 1%. You click OK. Now it will be added 1% to each month. And then, or if you want, you can clear everything and start all over again. The same thing you do with each line separate. This is how to create a budget. You're done, you click Save, it's done. Then you could run later on, this is a blank company. Later on you could see how on a report you could see how your actual versus your budget went. You're going into a report, and you see, first of all, you want to see your budget overview, and then you want to see your budget versus your actual. This company doesn't have any budget, any actual, so you won't be able to see it. Let's switch back to the sample company. This is a sample company. Here they should have a budget already. Let's say it's 2015, 2016. Profit and loss by account. You click Next, Next, and then Finish. And this is your budget for the year of 2015, which is the sample company. And you see what was your budget last time. And then you can run the same report. You want to see, was it close, the actual, was it close to your budget, or was it totally different? You click on the budget and forecasting report, budget versus actual. You want to see the same time frame because we only have one type of budget. You can have multiple. You can do a budget for the next 5 years or more. You click Next. This is basically, you want the account by month. This is the way we set it up originally. And then you click Next and then Finish. And here we'll tell you the year of 2015. Each month, the actual, the budget, and then the difference. The difference in dollar amount, the difference in percentage. Did it go up? Did it go down? Here, the actual, the budget against the other accounts were never budgeted. You had a budget last year that this year you will do $8,500. In real life, actual, you did $17,000. The difference in dollar amount is $8,000 and change. The difference in percentage versus the budget was 200%. And this is, you will have the same 4 columns for every month. Actual, budget, change in dollar, change in percent. And then you can see all the way on the right your total. The entire year, what was the budget for each account? Each row is a separate account. And then you see your budget difference in dollar amount. If you see a minus, that means the budget last year was more than the actual. And then you see the percent of the budget. And then each line, each row is a separate account, and you see the income and expense. And then you can see what your bottom line is. Your forecast, your budget actually was that your net income is going to be X amount. Your actual net income was this amount, and this is the difference. This is basically how to run a budget and how to run a budget versus actual. You can do the same for a forecast. You're also able to do a cash flow projector. And this is you want to see what you're expecting to be in later dates on your cash flow. This is a little more complicated. I mean, it has a couple of setups that needs to be done, and it's basically taking actual information. You start with how much money you have right now. You can add if you have any adjustments to the balances, and you keep on moving. Basically, how much money you're expecting to receive from your customers. The next step is going to be how much money you're expecting to pay out, which is your expenses, and then how much your accounts payable is going to be, and then at the end it will tell you how much money you will be left at the end. So let's say a date, you will enter the amount, click next, then how much money are you planning? You have expenses based on forecast. And then it will tell you, based on that, this is how much you owe at a certain date. The accounts payable, meaning the bills that are due, you will have to pay in this date. So at the end, you will have whatever amount it tells you, based on the collections and based on the bills that need to be paid. And this is basically what your cash flow projection looks like. To see how a budget, this is a previous budget on a sample company, to see how to create a new budget based on, let's say it's 2016, we're going to do it on profit and loss, based on no additional criteria. I want to see it create a budget from previous year actual data. You click finish. Now it's going to take the profit and loss from the previous year and it will add it in actual. And here you have the option to change, to say that this should not be this amount or it should be spread out over the entire year. This is a little easier to get an idea of how much it's going to be. And then, of course, if you enter an amount, how much it should be based on the later months, then you can click copy across and everything will be copied over. Once you're done, you click OK. Now you have two separate budgets. And then you can decide if you want to run two separate reports. You click on reports, budget and forecast, budget overview, which one do you want to run? And of course you can have this based on different years. And this is the same, this is the same report as you saw before based on the budget overview. This is basically how to do budget. I would like to continue with the preferences, which we left off from yesterday. We finished with the general. There are certain add-ons that integrate with QuickBooks. You will need to give permissions for each program to be able to integrate with QuickBooks. And this is what tells you exactly what is integrated with QuickBooks. Most of the time, there's nothing you need to do on the screen. Inventory and items and inventory is if you need to activate the inventory, you want to make sure that inventory and purchase orders are active. If you go through the Easy Step interview, one of the questions is, do you want to activate inventory? And if you answer yes, then it will be activated already. So you don't need to activate it. Jobs and estimates, you want to use estimates, and you want to be able to use progress invoicing. Job status is on the customer, on the job, the last tab, and you have 5 different status. Pending, and here you could rename it if you want to call it different. Part of the other setups, you want to warn about duplicate estimate numbers, but most of the time, since QuickBooks is generating the numbers, it's not an entry. This way, you won't have to worry about it. The only problem is if you enter the number based on a written book, then you want to make sure it's no duplicate. It's not duplicate. When you fill out an estimate, and you fill out an invoice, convert an invoice from a sales order, sometimes you might have items that have $0. There is a setting that you don't want to show those items. Why? Because usually it's in-house notes. Let's say, for example, you have an estimate. You enter an item here with the cost and everything else, and then you skip a line, and here you don't have an item, you just have a description with no cost and no nothing. You have the option to set. You don't want to print anything that has a 0 cost. This way, it won't print the notes. And this is set under here. Don't print items that have 0 amounts. Multiple currency. QuickBooks is able to track multiple currency. But you have to be very concerned, very careful. When you turn on the multiple currency, there is no undo. It is sometimes annoying, especially because there's US dollars all over the place, and it will say US, USD, and if you ever decide to remove it, there is no undo. So before you activate it, make sure you have a backup before, and then you know where to activate it. I have a client who called me up the other day, how do I turn it back off? There's no, when you click on yes, there's a big warning saying that this cannot be reversed. On payment, do you want QuickBooks to process your credit cards, paper check processing, and everything else, e-check? You have basically you could sign up for payment solutions from QuickBooks. Here is a screen to automatically apply payments. It's recommended to leave it checked. You want, every time you enter an invoice, to automatically apply the payments. Automatically calculate payments. This is if you enter this receive payment, instead of entering the receive payment on the top, the dollar amount, how much the check is, how much the payment is, you can click next to an invoice, and this way QuickBooks will automatically calculate that based on the invoice amount due, this will be the payment. Use on-deposit funds as a default deposit to account. If you have this checked, every payment will go in by default in the on-deposited funds, and you will have to record deposit to remove it from the undeposited funds and transfer it into the bank account. New versions the new versions give you an option to get paid faster by using the payment network. But of course, you need a subscription from Intuit, from QuickBooks. You have the option to show the link on emailed invoices, meaning on the PDF, or on the printed invoice itself, and they could copy the link and go on to their website. And of course, where do you want to be notified if a customer took advantage of paying you by using the Intuit payment network? Most setups, most settings don't have my preference, only have company-based preference. Employees and payroll, this is very simple, and we didn't cover much of the employee part in terms of, well, in this course we did cover it. First, in order to start using payroll, you have to make sure that it's set to full payroll, and then you can set all your preference and settings on here. If you want to display the employee list by last name, click it on here, or by first name, you click it on here. There is an option that every employee should be automatically set to be a sales rep by default, and this is the option on the bottom. Reminders. You want to set, I don't remember if you went through this or not. First of all, when you open a company, each user should set that I want to see the reminder popping up on the screen when you open QuickBooks in the morning. Then the administrator is going to have to set what should be shown in summary, what should be shown in list as details, and what should not be showing on the reminder list. If it shows either summary or list, then you could set how far in advance do you want this to show on the reminder list. So for example, if you have your company uses the to-do notes to remind you, you can show it in list or in summary. To use the to-do notes, the option is on their company. We'll see in a minute how it works. Bills to pay. I had a question the other day if there's a possibility to select which bills to show and which bills not to show. The answer is impossible. It's either all the bills or all the bills that are past due or none of the bills. So it's either you show summary or you show a list or don't show at all. And then you can also set how many days in advance you want it to see on the reminders. And then this is the same like everything else. Reports and graphs. If your company runs on an accrual basis, then leave by default your reports as an accrual basis. If your company runs on a cash basis, even though you enter bills and you enter invoices, but by default, your reports will run on a cash basis. The difference between accrual basis and a cash basis is even though you have an invoice, you have an invoice in January, you run your profit and loss. If it's on accrual basis, the invoice is not paid, then you have a sale. If it's on a cash basis, you don't have any sale. In February, the customer paid. If you run the report, and of course, in order for the report to show accurate, you will have to make sure the invoice is applied. The payment is applied to an invoice. So if you run your report, your profit and loss in February, if it's run by accrual, there is no sale because the sale was, the date on the invoice is January. If it's run on a cash basis, then you will see an income for sale because it was paid in February. The same concept applies the other way on bills and checks. What's your default aging report? Do you want to age the dates from the due date, which is recommended, or you want to age it from transaction dates? Sales and customers, do you want to activate, you want to use your packing slip, what type of packing slip you want to use, you want to see, you want to learn about the duplicate numbers, what's your default shipping method, UPS or USPS, and you could set it on here. Sales tax we already discussed, and then search is just updating the information in QuickBooks. Send forms, you have 3 options in the new versions, only 2 options in the older versions. If you want to use QuickBooks email, you have to make sure you're within the last 3 versions, which is 2009, 2010, and 2011. Right now, you always have to be within the last 3 years. Or you can use Outlook or webmail, such as Gmail, Yahoo, AOL, and etc. Here you can set how do you want your customers to see by default whenever you decide to send an invoice, an estimate, a statement. Here is where you set the wording. You want every invoice that goes out by email, you want to get a blank carbon copy, you want your email to get, or another email address, you can set it once and for all every time you email it. But, of course, you have the option on an individual basis to remove it. This is basically what the settings is all about. I hope you all enjoyed the QuickBooks course. If you have any questions, my email address is Mayer, M-A-Y-E-R, at fmdbusiness.com. You can contact me if you have any questions. Thank you very much. I wish you all good luck. Good night.